Uh, I'm in the process of preparing my quarterly, and as part of that, I update my outlook for the US, the Euro area, China, India, and Australia, both in terms of GDP and in terms of inflation. And when I'm talking about inflation here, I'm talking about the headline measure of CPI inflation. If I look at the outlook for growth, really it's quite benign, as indeed is the outlook for inflation. Last year, the US economy grew by 2.8%, and this year we think it slows to about 2.3%. The Fed did tighten for quite a while to slow the economy down to a level which wasn't inflationary. So growth this year in the US, 2.3%. Next year, we think 2%. There's been big swings when we come to the quarterly. You'll see in our model of US GDP, which is based on the Chicago Fed National Activity Indicator, there are big swings around where our model says growth should be, and that's really because of the shutdown in the pandemic drove growth to far lower than the model said, and then as recovery happened, you have these really big swings above and below the model. So you have big swings in 2021 where actual growth was far higher than our model suggested. Then it swung down in 2022 to lower than our model suggested. Last year in 2024, it was higher than our model suggested. Now it's coming down to about where our model thinks growth is, which is about around about 1.9%. So what we've got, like I say, in US growth this year is 2.3% this year and 2% next year. Euro area has been through a significant slump with output last year. Well, firstly, it was negative in a couple of countries the previous year, 2023. Picked up to 0.7% last year, 1.1% this year, and 1.4% next year. The difference really between the Euro area growth rate and US growth rate is that the population growth is about 1% faster in the US than it is in the Euro area. But a lot of those, that Euro area growth is really, a lot of it is actual productivity, amazingly enough. China growth last year was supposed to be 5%. I thought it was 4.6% coming into the final quarter last year. It was then there was a lot of amazing lifts in output, which produced 5%. I really believe that a lot of that, the difference between 4.6 and 5%, a lot of that was manufactured by local bureaucrats, I think, rather than actual. However, growth, I think, this year will be 4.5%, and growth, I think, next year will be 4.1%. And for an economy, second largest economy in the world, a 4.5% growth rate is really, really good. And so is 4.1% next year. India, India outgrows everything else on the board. Outgrew everything else on the board by growing at 6.3% last year, and we think it'll grow 6.5% this year and 6.5% next year. In Australia, I wrote a piece about a week ago showing that there's a pickup. A lot of this pickup is really, normally we follow the US cycle, that is to say we go up and down with US growth, but with a lag of about, say, 6 months to the US. But on this occasion, we're taking off ahead of the US, and that's entirely because of Albo spending other people's money to increase domestic demand. So growth last year in the Australian economy was 1.1%. Growth next year is 2.4%, and we think the growth after that will settle out at about 2.3%. Coming to inflation, what I've got here is the CPI measure of, or headline inflation. And that really shows that it takes a little while for the US to slow down to that 2.5% level, which we think is where it should be. Actually, the Federal Reserve doesn't target CPI inflation at all. It targets the personal consumption deflator, and that really is hitting their kind of targets. Currently, it's about 2.5%. Should go down to about 2%. But the headline CPI in the US was 3% last year, 2.9% this year, 3% next year, and finally gets down to what we think of the target of 2.5% in 2027. Euro area inflation last year was 2.4%. This year it's 2.1%. They actually have a CPI target of 2%, so they'll hit that this year. 2.1% and 1.9% yesterday. 1% next year. China, one of the reasons that I don't believe that growth that was in China was so strong last year is that they significantly missed their inflation target. Instead of 2% inflation, it was 0.2% inflation, and it actually looked like it was going to come in negative for a lot of the second half of the year. This year we expect Chinese headline inflation to be 0.6 of 1%, and next year 1.1%. So there's a real deficit, and what there really needs to be a stimulus in the consumer sector to generate domestic consumption. That's what's really missing from the Chinese economy, rather than the attempt to build more and more, send more and more export product to markets like the US or Europe. India, they target 4% inflation, and they got 4.8% last year. They get 4.3% this year and 4.4% next year. So they're pretty much hitting it, but they're emphasising growth rather than inflation. In Australia, we have some very interesting movements in headline CPI, courtesy of our brilliant treasurer, Clever Jim. This for 2024, we actually had headline inflation coming in exactly on the target of 2.4%, but in fact, core inflation was significantly higher. And the reason that Clever Jim was able to achieve that inflation target was, of course, he provided government subsidies, spending more of other people's money to subsidise electricity prices, and thereby producing that result of 2.4%. Assuming that he doesn't do the same thing in calendar 2025 because he's not there, or for any other reason, then what you get is you actually get a kick in headline inflation to 3.7%, just under 4%, and that's really because of the absence of those subsidies for electricity prices, with headline prices kicking up to a higher level, and therefore the rate of growth is higher. But you get down to headline inflation of about 2.8% by 2026. But really, if I look at the whole picture, it's a pretty benign outlook of moderate growth and moderate inflation. So this is an outlook in which recession does not in any way rear its dangerous head.